the concept's sometimes quite challenging for people, but what I've always found, Kieran, is all people need to do is literally do it in practice and understand the logic, and then consolidations becomes very simple. There are parts of consolidation that make my eye twitch. When you've got partial ownership, and Tom, I can see you smiling, you've got this company owns 49% of this. Is it equity accounted? Do we take the assets or do we take one line item? That's why I've been big on trying to use and push the tech that helps automate consolidations. I'll show you how to create some consolidation eliminations and journals in Fathom. And then my favorite hack is how to simplify your chart of accounts. Those little hacks take away so much pain in the consolidation process. It takes you minutes, not hours and days. Kieran, I've put in there 10 minutes. Let's see how fast I can do this without rushing.
Time is on, Tyler. Welcome to Fathom's Expert Series. We chat with advisors, accountants and finance leaders to learn how they're using Fathom to deliver clarity and confidence and help businesses thrive. We're talking processes, top tips and key learnings. Join us for a great conversation.
Hi, welcome back. Thanks for joining us on the Expert Series. Tyler Caskey is our guest today. He is delivering a masterclass in how to automate consolidated reporting. He shows us step-by-step how to produce a report in Fathom in under 10 minutes and talks through his approach, best tips and traps to look out for. Tyler began his career at KPMG in New Zealand. He's now an experienced accounting partner at TheBeanCounters in Sydney, Australia. He most likely went for an early morning jog on Bondi Beach ahead of this interview. Tyler shows us today that consolidated reporting can be easy, fast and low risk. He generously shares his process and his overarching approach, which covers 4 areas: simplify, eradicate, automate and delegate. In this video today, Tyler will share important tips, for example, how to simplify the chart of accounts, producing a one-page consolidated P&L, prepping a report for a board or stakeholder presentation, and shows us how he uses the app Mayday to quickly check that inter-entity loans balance. The TheBeanCounters team serves businesses worldwide. Their goal is to make business simple, and you'll hear this theme come through today. If you follow Tyler on LinkedIn, you'll get his candid take on the best solutions in market and more excellent insights. This is a masterclass from one of the best in the business, so jump in for an excellent demonstration.
It's our great delight to welcome Tyler Caskey to our interview today. Welcome, Tyler.
Thanks, Kieran. Good to be here.
I'm also joined by our resident chartered accountant and head of advisory for Fathom, Tom Bilton. Welcome, Tom.
Hello.
So Tyler, it's so exciting to have you today because we're going to talk all things consolidations, and we're not just talking about it. You're actually going to demo for us exactly how you run consolidated reporting. Before we dive into that, you're a chartered accountant, you've got public practice experience, CFO experience, and you're also a partner at TheBeanCounters. Tell us, why are consolidations considered such a nightmare?
Yeah, it's a good question. The pain for me is, as much as the data changes in accounting, it always flows onto your consolidation. So I always thought I could never do a consolidation once and do it right. And I remember when I was young, working on like large groups, I was always doing them in Excel, and it just took so long for me to update the data. And I remember doing this at 3 a.m. one night for a law firm, like as a dividend changed between an operating entity and a trust. And I just remember thinking it was just painful accounting and people really didn't value it. So that's why I've been big on trying to use and push the tech that, helps automate consolidations.
I saw this fantastic Reddit thread the other day, and it was this person who was finishing their grad program, and they said, I'm finishing my 5-week module in my grad program covering consolidations. This has been the worst experience in my educational career. Does anyone else struggle with consolidated accounting? Does anyone actually like it? Does anyone actually love it? So you have obviously grown to love it and you smash it now because you're doing it all the time. Tell us about how much work you're doing in consolidated reporting for your clients month to month.
Yeah, we often do it for our larger groups. And the goal is to take that perception that people have that they hate consolidations and make it simple. And I've been working on large consolidations. Like I remember we did a 60 entity consolidation at AGL, the listed electricity company, and that really helped me set the foundation of, the learned experience in university plus practical experience, in accounting or in finance. And then now in our business, I'd say at least every month we're either doing, helping, assisting, or refining a consolidation for a client. We really just try to make it as simple and as automated as we can. And to come back to that Reddit thread, what happens a lot is I'd say 19 out of 20 consolidations are very simple. It's typically some intercompany loans. It might be some dividends moving between two entities, and there might be some sales or some cost of goods sold or some head office recharges. And those are actually very simple to consolidate and automate, but also to manage so you can set it up so it's not a painful process. But I do resonate with what that person said on Reddit. There are parts of consolidation that make my eye twitch a little bit. When you've got partial ownership, and Tom, I can see you smiling. It's the same thing. You've got partial ownership. You've got this company owns 49% of this, and is it equity accounted? So do we take the assets or do we take a one line item? And so the concept's sometimes quite challenging for people to consolidate with. But what I've always found, Kieran, is all people need to do is literally do it in practice and just see how simple it is and understand that, if it's company A and company B and company C, how that data moves between them, understand the logic, and then consolidations becomes very simple. And now that we've got systems, like Fathom that help us automate the consolidation of reporting, I've taken, I think the pain for me has probably gone, honestly, it used to be an 8.5, a 9 out of 10 when I did it in Excel as a financial controller. For a simple consolidation, it's I don't know if there's any pain in it anymore. It might be a 1 out of 10 painful. Yeah.
That's amazing.
Any complexities in the sort of theory of what you're, I guess, trying to get the outputs to be, I think if you take that and then you layer on a very manual process on top of it, that's where the pain is. And when you're doing things under time pressure at the last minute, realizing things don't balance, or I think that's where the real pain comes in. So yeah, we're going to run through a bit of a process today, I think, that's going to help take that pain away.
Yeah, it's exciting to hear from you. We're really privileged to have your time to practically show us which steps you take. We know that at the TheBeanCounters, you guys are really big on system scoping and implementation and process automation. So let's dive in and let's have a look at what we're going to cover today.
Excellent. Thanks, Kieran. And I think today the goals I'm looking to do is to try to make this consolidation process easier, faster. But for me, it's always about risk. It's about how can I do this consolidation process without putting an error into the system? And I'll be demoing a couple Xero files, the use of Fathom to do the consolidated reporting, but also another cool app named Mayday that helps check your intercompany loans. And that moves to our inter-entity loan balances. I've been using Mayday ever since it originated, maybe about a year ago, which is just a fantastic system that helps make sure your intercompany balances balance and identify the ones that don't. I'll show you how to connect our accounting files to Fathom. And then my favorite hack is how to simplify your chart of accounts so consolidation is really easy. And that's been the biggest hack. Kieran, you asked what we do as a business is we try to help businesses use their Xero file or QuickBooks or My file, whatever they use, in a way that I call it a one-for-one elimination as much as we can. So, if you're selling and, there's sales in one entity and expenses in another, but that are internal that we're not going to report to the outside world or the bank or investors, then I always try to keep that chart of accounts very simple. And I've got sales internal and expenses internal. And those little hacks can, take away so much pain in the consolidation process. I'll also, create some consolidation eliminations and journals in Fathom, and then effectively do a really simple profit and loss and balance sheet on a page report. Something that we could lift and shift into the board pack.
Cool.
So if we go to the next one, this is my favorite process across all finance and business and back office functions. But really, it's our 4-step process in how a CFO or a head of finance can create a change in a business that, elevates their team's output, but also reduces the risk of error and all that type of stuff. So for me, it's simplify, eradicate, automate, delegate. And, any process, you could apply this to accounts payable, accounts receivable, reporting in a finance team. But if we talk about it in consolidations, simplify, as we talked about before, we would have individual chart of accounts for our loan balances. The amount of entities I see that have 5 loan accounts all lumped into one, or naming conventions that aren't easy to understand. It just says loan to Tom, where it should be loan between Tom and Kieran, just to make it really clear and simple. The other one would be the eradicate process. And this typically, relates to reporting for me. So if there's something we don't have to do, like a journal we don't have to do. So in our consolidation process, if we're reporting billions or millions, there's no way I'm doing a journal for under $1,000. So if I've got a phone bill for $90 because Tom's Vodafone bill comes in on the 1st of the month rather than the 30th, I just don't care. I eradicate that journal. I don't do that process. And that means my consolidated reporting is materially right. And I think that's one of the key things we miss in finance is letting go of the detail. And a lot of people will be like, oh, it'll create a fluctuation. But I would rather explain a variance than explain to my board that I spend 20 minutes every single month doing and reversing an $80 bill for Tom, when just the value to output ratio there just doesn't make sense. And then the second last is automate. So wherever I can get a system to do the work, like bank feeds and Xero, fantastic, automated consolidations and Fathom, superb. And what that does is it allows me, I can set up the process, and then it allows me to delegate it to someone, which is the last one. So if I can get a system doing the work, then I can actually, break the process, make it nice and simple, and then give it to the person in my team that maybe hasn't done consolidations or hasn't done a process before, and then give it to them. And it's super easy for me to delegate and watch over the accuracy of that.
And I love that with TheBeanCounters. You guys are always really big on, if you're going to adopt new tech or a new process, how easily can you get the team on board?
Yeah, I agree. There's been a fantastic move in finance over the last 10 years about simplification and getting things right at the source. And I think that's been a good thing to see, because finance teams, I think, compared to maybe how I was operating in 2010, I think on average, we're about twice as fast. Our value curves should be twice as much if you're using good technology. So this one, and it's not a setup to have Fathom here with its little, 414 ratings. And
let's just highlight the number of 5-star ratings while we're here.
And I do know why Fathom's it's a staff pick. It's got that little cup there. Whenever I look at the consolidation apps in the Xero, this is the Xero app marketplace for anyone that hasn't seen it. I look at how many reviews they've got, how high is the rating, and you can quite easily see there you've got Spotlight and Fathom, which are the 2 longest, apps that have been in the market. They're both continually innovating. We can see SIFT reporting down the bottom right, really coming along out of South Africa. And we've got a new player in the market, Translucent, which, I played with their consolidations the other day, and it's okay, but, it's nowhere near where Fathom and Spotlight are. If I look at the App Store, I always look at the reviews that people are putting in to, see how much they like or dislike a function. And I do look at the 1-star scores, And I know why Fathom's well rated here. It's because it's simple to use. Like Spotlight for me, like I'm pretty comfortable with systems and numbers, but I do struggle with Spotlight's complexity, and same with maybe like Sift. It's a little bit too complex for me. But the last one I do want to highlight, it's not a consolidation app, but it's Mayday on the top right-hand side. And we're going to show that how good it is managing intercompany loans, which is a beautiful add-on to the Fathom system stack.
That's awesome.
All right, let's hit our next one. And so today, before we jump into the systems, this is what we're going to look at. We've got 2 Xero files. We've got a restaurant and a head office. And we've got some recharges and some loans between both entities. We're going to use Fathom to automate the consolidations, and we're going to use Mayday to make sure that the inter-entity loans balances. And I think these three just work harmoniously together. It just makes the identification of accuracy really, really easy. They're super simple to connect. It takes you minutes, not hours and days. So Kieran, I've put in there 10 minutes. Let's see how fast I can do this without rushing.
Time is on.
Okay, let's demonstrate how to consolidate in Fathom with 2 Xero files and Mayday in under 10 minutes. So I'm going to share my screen and take you through the flow that I take for almost every single entity. Could be 2 entities, it could be 50. It's pretty much the same.
Or 300 with Fathom. Up to 300. Yeah, we've done some large ones in Fathom before. So I'm starting here in a single Xero file. We're just going to play on balance sheet consolidations today. We're going to, assume that there's no intercompany. So we've got the restaurant business here, which is the trading business, and we're looking at the balance sheet at 30th of April. It's a very standard restaurant business. We've got some cash, we've got some clearing, we've got some prepaid items. But when we come down to the inter-entity loans, we can really see there's a lot of, there's about 4 in the group. And I can see we've got an inter-entity loan between the head office and the restaurant. And you can see there it's a debit balance of 6412 at end of March and 6912 at the end of April. And then, just some normal standard, business equity items. So we're really just going to look at connecting this file and automatically eliminating this loan account. We're going to have a look at the head office balance sheet for the same period at 30th of April, and we're comparing it to March. So head office typically has a bit more cash. It's got some, computer fit-outs, computer equipment, leasehold improvements, but then we've got a lot of inter-entity allocations and loans. So again, we're looking at this inter-entity loan balance here, and we can see it's 6412 and 6412. And if you've really paid attention there, you'd notice that the balance in April is slightly different. So I'm going to show you the strength of Mayday. And Jane Jones has got a fantastic balance there she's owed $877,000. Good job, Jane. So what I'm going to look at here is Mayday. So Mayday has 3 functions. It's got balancer, recharger, and brag. Today, we're just going to look at balancer, which is a free system. And you can see here that I've got like an inter-entity loan balance between these 2 that is out of balance. So if I click on this, this is the loan that we just showed you in both entities. And so this is showing you 2 Xero files on one screen. And you can have, like we've had almost 40 entities, but like over 100 inter-entity loans. You can do it as a matrix, you can do it as detail, and it will always pop the red items, the ones that don't balance, to the top so you know how to fix it. You can fix it in Mayday, but also you don't need to. But if I go back to, say, March, 31 March, I can see that I'm in balance. So my consolidation works. Clearly, someone's gone and done something fun in April or March, which we can go fix. But for now, we're doing a March month end. Right. Just wanted to show how good this system is. Automatically connects to Xero. Super easy to kind of manage. And super easy to set up your loan balances. Takes the best part of 5 minutes. And so now that we've got we know our
at 31 March, our balance sheet is in balance, or our loans are in balance because we're green. All we've got to do is jump into Fathom. And as they say on cooking shows, here's one I prepared earlier. So I've always got our 2 Xero files connected. Really simple to do. You know, I've just made sure that I updated it 6 hours ago. Fathom automatically updates this every day at 8 a.m., which is fantastic. And if you really want, you can jump into Fathom here and do a bit of, you know, editing on your chart of accounts. You can group certain items high and low. I can move items between categories. If I want to move PAYG up into accounts payable, I can. Super simple to do.
Yeah, it's a very cool function of Fathom that you can make adjustments to your P&L and make it more expansive with the folders and change it around the chart of accounts, but it's not going to change your original chart of accounts in Xero, etc. So yeah,
it's really strong, especially if you're in accounting and an accounting firm. It means you can kind of work in Fathom without having to mess with people's Xero file. I love the reclassify option. Like for me, this is really cool. Like the reclassifying, if I've got like a restaurant business and I want to reclassify salary and wages as like variable cogs, that one's just so fast and easy for me to do. But then also, like, I only learned this last year, but the drag and drop function's just a breeze too. So that one I've found really good.
I need to make that more obvious, I think. And the fact that you can create folders and then consolidate those into, you know, summarize or expand the detail of your reports. I think we'll touch on that a bit later.
Yeah, absolutely. And like to connect to Xero files, super simple. Just go add, grab a company, connect whatever you're connecting to. And then within about, I'd say 30 seconds, you're connected. Give it a minute and all the data's there. Fathom's very good at bringing through simple, like high level data. So I've got our 2 Xero files, and then I went add and made a consolidated group. And I just name it, add my entities, pick my dates, and create groups, which takes, again, the best part of under a minute. So now I've got the good food group, and I've got 2 Xero files connected, and I'm going to go into the settings. And really simple to kind of follow this 1, 2, 3, 4, 5, 6 process to go into it. So I'm just going to go up here, and the data and settings have changed because I did a little bit of mapping before. Takes me a second, and I'm updating that group. That's one of the things I love about Fathom is how fast it moves and how fast it adapts. On the update data screen, there's also some things to note down here. You just need to pop in and choose your retained earnings and your current year earnings. But then also, this is where you can do a consolidated adjustment. So I'm just going to demo this today, but we're not really going to be using this too much. So if I wanted to eliminate a dividend between the two entities, super easy for me to do. I'll pull out dividends paid for, let's say, $2,000, and I'm going to pull it out of other income and decrease it by $2,000. And one thing I love here, I've got like an imbalance check, and you notice there I cannot post a balance. See, I can't click that button if it's not in balance, which is really good. So I'm not doing one-sided journals. I can pick my period that it goes into, and I can write whatever journal narration I want here. And then create that adjustment. And that's effectively just a standard journal. The cool thing about this is it's not in your Xero file. You're doing journals inside the Fathom file. So the next one I always jump into is the group profile. You know, this is where we can edit names. We can add logos if we want. So I can drop in there and pick a logo. I can add tax rates. I don't typically go too deep into these for consolidations, but where I really do the work is the chart of accounts. So in here, we're not going to do too much work on our profit and loss. I'm going to leave that as is, but I am going to go in here and automatically eliminate our inter-entity loans. And a lot of people forget how, or not forget, but don't know how simple this is. So I'm in the consolidated group chart of accounts, and I'm just going to go down to my loans, and you'll notice this eliminate button starts to come up. And I've got here all the inter-entity loans, and I could one by one go and eliminate each of these if we were consolidating the whole group. But today we're just consolidating head office and restaurant, which would be a, potentially say for bank reporting or maybe a buy-sell arrangement or something. I've just jumped in that, eliminated that, and super easy to do, undo. So again, I'm just jumping into my restaurant business, clicking on eliminate, and going done. Now, effectively, that does a debit credit journal. So these lines will not show in your consolidated balance sheet, right? And they just show up a nice red eliminated there.
And I was going to say, might be worth just showcasing the download preview reports. If at any point you want to check what's going on in your underlying files, even if there's 60 of them, and even if you've got multi-currencies as well, you can hit the download preview and start breaking down every entity by P&L line item, balance sheet line item, see any adjustments that you've made. There's an adjustment column between the P&L and balance sheet, and also any eliminations that you've done. So yeah, super powerful. Yeah,
and Tom, this looks horribly similar to my old Excel spreadsheets that I used to make back in 2007. So you're right, like this really automates the manual part of what we used to do. And I can see the sales. This is just showing August 24. We can always change that date. But really these eliminations, this is what I'm checking, is like rolling down into here and going, okay, so, we've done our eliminations for our entity journals, right? And then I can see I'm actually out of balance, right? So as of August 24, I'm out of balance. So that's really handy. It's also like a double check on the Mayday work. Mm-hmm. It's a good report, but yeah, that's very much what accountants are used to looking at. And I'm not going to drill. Oh, sorry, Tom.
Let's move away from spreadsheets, but they're there if you need them.
Yeah, indeed. So I'm not going to jump too heavily into KPIs and targets and alerts for our consolidation stuff, but just know they're there. And I'm going to jump into reports, and I'm going to make a consolidated report at the end of March for our board pack. So I'm going to go create a report, and you can make it from scratch. It's pretty easy, but I do like the templates. Like they save me a bit of time. I'm going to roll down. I'm going to go this month versus last month, and I'm going to choose March. So I'm going to go March 24 and go create.
And it's worth just saying that you can create as many of your own templates in Fathom as you like, and then go and use those. We've also got a few standard ones, but yeah, really powerful feature for automating. You've got another consolidation come up, just use the template that you love to use. So yeah, very powerful.
And I agree, Tom, like some clients like to see, companies side by side and then, the total, where other business want to see, they view the business as a consolidated total as well. So, more like this, putting them together. So you do have a lot of flexibility in that. This one button I really love. So, for a board pack, I very rarely show like full detail. I'm just going to go summary P&L and balance sheet in there and then go save changes. There are some really cool other options. You can display decimals or display rounded figures, and it will kind of show those there. I'm going to go a bit more detail. And then within minutes, now I've got consolidated revenue March and February. And if I roll down, I've got like almost a P&L and balance sheet on a page, and my intercompany liabilities are removed from these amounts. And I've got a balance sheet here that balances 1727 and 1838, nicely matches. And then I can really get like something that I can pop into like a board pack really easily. If I just go back to reports, click on the download button, and the professionalism of this compared to what I used to be able to make in Excel is just mind-bending. Like I might delete that first page if I'm dropping this into a board pack. But this one here, like being able to get a consolidated P&L and a balance sheet on a page with nice formatting. It gives me greens if it's good. It gives me red if it's bad. I love the blue formatting compared to, how risky Excel can be. this just looks really, really strong. And also for an accountant, they can quite quickly see, oh, why did we lose money this month? What was clearly our expenses are too high. So instead of just being in the detail, now I can actually look at, okay, now I'm in the board meeting. Why is my consolidated group, spending more money than we're making, for this month? Whereas last month we kicked butt, because that's the first thing a board member is going to do, is about a single, P&L and balance sheet on a page lets you really understand the business. I'd also quickly look at, like, why is our tax liability? Maybe we need to go do a tax expense journal. And Tom, as we talked about before, the thing I love about automation here is if I'm like, oh, I haven't done my tax expense for the month, or I put it in the wrong month, I go drop it back into the Xero file, go back into Fathom, jump into my companies. Within a couple seconds, this one's the thing that saves me that days, like not days, but hours of time. I've done my journal. I click update from Xero. I bring across our Xero data again, click update. And within a minute, that journal's pulled out of Xero back into Fathom, and then I can redo my reports. And those types of changes are the things that just absolutely change so much time and life for accountants at the end of the month.
Powerful stuff.
And I love what you're saying, Tyler, that the good formatting and the visual cues actually help with analysis and then talking to your client about what's on the page.
Yeah, and it can be your client, it can be your board member, because the last thing I want at a board meeting, Karen, is some, like very intelligent board member to go, oh, why is the tax liability negative? And it's every accountant's got it. Like, I've got 20 plus years experience and I still do it. Sometimes I'm buried in the detail, and the more simple we can have a end result, and don't just like print it and throw it in the board pack, like print it and just stare at it, go get a coffee, go for a walk, think about the numbers, and then think about the questions that a board member or a client's going to ask you.
That segues really nicely into our next section. You're saying spend less time making the data, more time reviewing the data, but you've got a few tips and tricks that you've prepared for us, Tyler. Can we step through those?
Absolutely. So this one we mentioned before, but it's a really simple separation of internal versus external sales. So if you've got a consolidation that happens every single month, but you sell from company A to company B or trust A to trust B, create general ledger codes that are separate for internal and external sales or COGS. And that just means in Fathom, you can one-for-one eliminate them, and you never have to do the journal. So instead of doing a journal, you let Fathom's auto eliminations, remove them. And that just means in Xero, you've just got to make sure they balance. And, because consolidations are really what you do with the outside world. It's not, how much sales, one small business grabbed from another within the group. It's really how much did we sell to the outside world. And then the one on the right there is about like naming structures for loans. Like Tom and I have talked about this quite a lot, but it's really about, we have strict rules. We often go into entity and then first entity name, second entity name. And the second one is always the Xero file that it's in, or a MyOb file, or QuickBooks file that it's in. And so when you're eliminating, it makes it really easy to do. But you don't have to do it. Like you can use Fathom even if you don't have the perfect chart of accounts. And also sometimes it's good just to connect Fathom, click through the buttons, do the eliminations, and then the next month start, improving your chart of accounts. Because as Tom and I showed before, like the drag and drop and, consolidation or grouping of chart of account codes means your chart of accounts don't have to match. They don't have to be perfect. You're really working on names and groupings and classifications rather than exact GL codes.
What I love about dealing with the efficiency side of the consolidation as well is that you have so much more time to think about what does the end user or the stakeholders want to see. So whether that's less detail, maybe a summary formats or specific areas of the accounts for the board, or maybe more detail as well. You can include as much detail or as little detail as you want in Fathom and build that really quickly. So yeah, analyzing what's going on and thinking about what those people, end users, are going to want to see and what is going to add value, and then creating either a simple report or a complex one. It's up to you with Fathom. So yeah,
and that, like, this type of work, the simplification of your chart of accounts, you don't have to do it at month end. Like, I always do it middle of the month. All my BAS is done, all my payroll tax is done, my compliance is handled, month end report's good, payroll's done. And then these are like my little automation things. And we used to have a rule in our team that we had to do one improvement each per month. So, and I think it's just really strong to have a nice, simple chart of accounts. But, very rarely do I walk into a business and they've got 10 entities with the same chart of accounts. You're just never that lucky.
Yeah, and we'll save it for another video, but we've talked before about the day one accounting principle, which blew my mind a little bit when you told me about it. But yeah, maybe just share the concept of day one accounting.
Yeah, I've been doing that since like 2007. I personally don't love month-end reporting, and so I try to get it out of the way as fast as I can. And I always play about the 90-95% accuracy rule. So since I think the first time I got it was late 2007 for a $55 million business with about 400 staff. And, we had just month-end reports that we would get out to the business before 5 p.m. on day one, and we just simplified like our accruals. We didn't over accrue. Our billing process was all finished and closed by the last day of the month. And we just had the finance team all working together, on that one day to get the reports out. Because I find if I spread it over 5 days, people take 5 days. But if we do it in one day, 9 times out of 10, I'm going to be pretty damn accurate. Every now and then you'll miss something. It's okay. You can go and do a revision. But it's better than spending 5 out of your 22 working days per month looking backwards. I always think if you can report on day one, then you've got 21 of those 22 days to look forward, to add value, to make improvements, to make sure that you're not just like reporting and telling answers. You're actually helping the business understand data, make better decisions, and then utilizing your system and process knowledge to actually make things better. And, we always used to go around after we finished month end and recalibrate with the billing team and the assistants. How could we help you do billing better? Because if we made their life better, then our month end got better and our close got better, and then like the business started to hum. So finance teams, if you can get your month end shorter, then sometimes you can actually go add value to other people's lives rather than just automating your own.
Yeah, it's an amazing insight that you're sharing, Tyler, because you're talking about an end-to-end view of the process, and you're one part of that whole process, but you've got the whole process in view, and you can make the whole thing better rather than just thinking about that one part of the process you're involved in. Yeah,
I've seen a really fantastic change in the accounting firm market recently as well, is that instead of accountants just touching the last 20% of accounting, which was the financial statements, tax returns, the final accruals, perfection piece. There's a lot of like virtual CFO and CFO as a service and month-end report services that accounting firms are doing. Mm-hmm. And they're getting into like efficient AP processes, efficient and automated accounts receivable processes. In a simple way, I've got a friend that goes into businesses and helps them collect debt better by utilizing the automatic reminders in Xero. If they want more, he might add on Chaser to that. And the accounting firms are able to do that now because we've got live reporting in Xero. We're not spending 5 days creating a consolidated report for a client. We can do it in, an hour or two using Fathom. And so the system and the touch points with the clients are just so much better. And so our value, instead of just doing once a year or once a quarter, reporting and tax, now we're actually helping clients with their value curve. And I think that's been the best change in the market I've seen. Okay, let's do our traps to avoid in our final reports, which is our last slide. So this one for me is the biggie, is like, just don't do a P&L with too much detail. Like, I always try to do a P&L on a page. You know, I try to get away from versus budget versus forecast where I can avoid it. I try to do actuals versus actuals. And I really try to group P&L items with intelligence. So if I've got a people business, you know, I'm always grouping my people costs. If I've got like a manufacturing business, I'm grouping my manufacturing and selling costs. And I think that one's, you know, something I learned early was, if you can have a P&L on a page, you can give detail later, you're going to have a better process. The other one is like checking into entity balances too late. You should be checking into entity throughout the month, at least once a week. Worst case, you're going to do it, you know, a couple days before month end, but there's always one-sided entries in one entity that don't flow through. Just always make sure you do that, because that gives you the chance to talk to your team about a process improvement without time pressure, without stress. And it's not 9 p.m. at night when you realize that's happened. It's usually 10 a.m. on a Tuesday, way before month end. And then the one that used to get me, I think I got better in my 40s, was checking my expenses versus budget too late. So, or expenses actual versus last month's actual. You know, really good CEOs and board members will like hunt for like expense anomalies. Have you spent too much on consultants? Have you over purchased on advertising? Is your SEO, did you just drop 300 grand on that? And, you know, that should have been spread over a period of time. So really looking at how does my P&L look at a detailed level, I think helps a lot. And then the last one for me is the best part about the accounting market at the moment is like trialing new tech. You know, if there's a system like Fathom that can automate your consolidations, try it before month end. You know, try an account payable technology, try grabbing air wallets and automating, you know, your accounts payable or point of sale, you know, systems. That stuff just changes lives and saves you so much time. And then once you learn these things, share that information with your team. So they're my like top 5 traps and tips.
Awesome. What would be your key learnings with delegating to your team?
Yeah, I always start with the why. So I always go, we're making this consolidated report. A good example was for a restaurant group. We had 5 restaurants and we did consolidated reporting side by side in Fathom. And we did that because we wanted to show the comparables of the cost of goods sold versus sales percentage for one entity versus the next. And we also wanted to show the staffing costs versus sales. So if one was at, you know, 30% staffing costs and the other one was at 35, we wanted to like know that. So what I shared with the team is, this is why we're making this report. This is the format we want to see it. And like the outcome of this might be, hey, maybe we're overstaffed here or understaffed here, or maybe our accounting was wrong. Or maybe this was the way to pick up errors. So I look at that. The second part is I try to teach my team how to add value. So, you know, I really say, hey, our job is not to like just repeat the same process and do it over and over again every single month, every single quarter, every single year. Our job is to effectively make all our manual processes redundant, automated, systematized. And so like we can actually get out from our desks and add value to the business. As I said about helping accounts receivable, you know, I think some of the biggest value I've put into businesses is like automating expense processes and expense reimbursements, you know, because it's used to be such a pain. So really explaining the why to my team, and then, you know, showing how those things can not just impact the bottom line of a business, but actually impact the pleasure and happiness and engagement people feel from working in a company.
Yeah, have some fun.
Yeah. Even if it's not fun, just make it not suck is the plan.
That's a good starting point.
Yeah.
That's the quote of the week.
Yeah.
Tyler, it's been such a privilege to spend time with you today and have you unpack your process for everyone to show consolidated reporting in practice. And this has been packed with insights. 3 takeaways for me are simplify everything. I love the phrase you used, move away from making data to analyzing data. And I love your comment just earlier, just try out new tech, give it a whirl. I know that you are happy to be contacted, so we'll make your details available at the end of this interview. We've got a QR code that people can scan and get in touch. But before you go, what's exciting you about TheBeanCounters at the moment? Tell us a little bit about where your business is at.
Yeah, thanks, Kieran. We're just a team of 8, maybe soon to be 9 here in Sydney, Australia. We've just come off like a really big 1-year project with an international client in Europe and Dubai and America. And we've had a lot of learnings about that, about like really good project management and how deep you can take automation and efficiency if you really try. And what we've been able to do is take some of those learnings from a big client into like mid-sized and smaller clients now about how to set up a finance system, a payroll system, a CRM, so they all talk really well, and they make not just finance teams' life, but the life of the business and the operators and the information that they have available to them, that's now live and is easy to understand and has been reliable to use. That's been our most exciting thing. We typically work on businesses like Xero and Employment Hero and Fathom and NeoWallex and Wheel. But I think the mid-sized business has so much opportunity to create incredibly efficient, back-end operations at a fraction of the price to large businesses. And that's what's been exciting me, is how much tech has enabled our finance teams to add more value and to remove the pain points in the market. And for us, our job is helping people find that tech, install that tech, and then, if we're lucky enough, sometimes we stay around with clients for 2, 3, 4 years and slowly help them kind of make every part of their business better. And it's been a good journey coming out of CFO and tax and compliance world into this.
Tyler, there's a fun question we ask every guest on our expert series, and it's this one. What's something that CFOs aren't talking about enough that they should be talking about more?
Oh, I like this. I'm going to have a left of center one, but it's physical and mental health in a finance team. I really do care about tech and finance and automation. The best learning I've had lately is working with my team to make sure that they're happy, engaged, and in a good mental space, which has doubled or even tripled our productivity. Our team is all casuals now, no one's a full-timer. There's no official start date and stop dates. And so for me, when I was a CFO, potentially I was a bit too pushy on productivity. I would be a lot more flexible. And I've learned that with more flex and more care and a little bit more insight into my team's, lives and happiness, that they actually perform better, potentially in less hours than, we used to do in, 9-hour or 8-hour days.
There's science on that. You can do more if you're happy.
Absolutely. And I'm not talking 5% more. I think our team are triple productive because they have flexibility and happiness, and as much happiness as we can get.
Yeah, definitely a one for the future. 4-day week.
Maybe. Well, we're at a 6-day week at the moment, but however many hours you like.
Yeah, true. Cool. I just wanted to say, definitely reach out to Tyler via LinkedIn. He'd be happy to share his thoughts with people. No cost, it's free, just to have a quick chat. Also, if you're interested in having a more detailed consolidation report, reach out to me again on LinkedIn. We'll send that across for free. It doesn't cost anything, and you can have a look at some of the other capabilities of Fathom beyond the reporting we showed today.
Awesome. Thanks again, Tyler. It's been a pleasure speaking with you today.
Thanks, Kieran. Thanks, Tom.
Can we officially call you the Caskey King of Consolidations?
I don't like them. Do you know that I delegate them now?
The delegating king of consolidations.
My business partner, Dan, is so good at them. He's so much faster at them now. It's cool to watch. So, yeah,
Delegation's working.
I'm slowly getting kicked out of my own business, which is fantastic.
This is going in the blooper reel. This is really so